Hello everyone and welcome to This Week in the Markets. This week, Greece received a new formula from European ministers to fix its budget problems, and it approved the next round of bailout funds for the country. In US, economic data is quite positive and is showing signs of improvement, and Wall Street is still watching the fiscal cliff like a hawk and reacting to any news or rumors relating to it. And we'll dig deeper into the details after our disclaimer. So information contained in this video is intended to be general advice only and should not be relied upon as financial product advice. Furthermore, the advice has been prepared without taking into account your objectives, financial situation, or particular needs. So you should, before acting on the advice, if you choose to act, consider the appropriateness of the advice having regards to your objectives, financial situation, and needs. So after 3 weeks of tough negotiations, the European finance ministers declared on Tuesday that they have found the formula to help restore Greece's fiscal state. Part of this formula involves cutting the rates on bailout loans, suspending interest payments for a decade, and extending Greek deadline on repayments. Will this be the last we hear from Greece and the European debt crisis? Well, we have our doubts, but the positive thing is that the country was cleared to receive its next round of bailout installment in December, which will help to ease short-term bankruptcy fears and keep the country running for a while. In US, economic data have been quite positive, with more evidence that the recovery is gaining momentum. One of the most important economic indicators of future strength in the manufacturing sector is the monthly durable goods orders. According to the latest October report, durable goods orders remained the same last month compared to a month ago. While this is not strikingly bullish, but considering that last month orders grew at a pace of 9.2%, and many were expecting orders to fall this month, holding steady gave the market something to cheer about. Secondly, consumer confidence also increased more than expected last month, according to a report from the Conference Board. It confirms a separate report by the University of Michigan and Reuters that consumers are at their most optimistic level since 2008, that's before the Lehman Brothers collapse. This is very important for the economy because the more confident consumers are that they will have a job, a house to live in, and would not go hungry, then the more they are willing to spend on other cyclical consumption and borrow from the bank to buy a new house or new car. In terms of the housing market, the news were mixed, with the Case-Shiller index suggesting a quicker pace of recovery in home prices, that's in September, but new home sales were weaker than expected last month in October. So we have in this chart here the Case-Shiller index in yellow of home prices, and in white is the new home sale figures. So you can see that both were not alarming and not really showing much bullish or bearishness, and it still suggests that the housing market is stabilizing and is slowly recovering. The fiscal cliff remains the hot topic on Wall Street, and the markets and politicians just doesn't seem to be able to find a common ground on this. One day it seems like the fiscal cliff will not be done because of some politician resisting changes, but another day it seems like everyone's playing nice again. Obama said at a televised White House event yesterday that he hoped to get this agreement done before Christmas, and that helped to send equities rallying higher again yesterday. Unfortunately, we think that this up and down action will probably continue while negotiations go on in the Congress, and will continue until they would come out to a compromise on the fiscal cliff, which will probably not occur until as close to Christmas as they could make it. The results will probably not be as interesting as the investors think it would, and if anything, equities could get a temporary relief rally just on the fact that there is one less uncertainty in the market if the fiscal cliff is resolved. And that's all for this week in the markets. Until next week, on behalf of the Trading Pursuits team, we wish you all profitable trading.